Good evening. Gold is once again commanding global attention, surging to unprecedented heights and then swinging sharply in ways that have left markets rattled and consumers rushing to act. At the start of 2026, a worldwide dash toward the precious metal has pushed prices to historic levels before sudden reversals underscored just how volatile this moment has become. From New York to Paris and far beyond, buyers and sellers are crowding into shops and markets, reacting to rapid changes in value and a climate defined by uncertainty. The metal reached a new record earlier this week, only to retreat days later, highlighting both its enduring appeal and its inherent risk. As consumers line up at local dealers and investors shift money into gold-related assets, questions are growing about what is driving this surge and what it means for everyday buyers and sellers. At the center of the latest attention is the dramatic movement in prices. New York spot gold climbed to more than $5,418 per troy ounce on Wednesday, setting a new all-time high. The troy ounce remains the global standard for measuring precious metals. By Friday afternoon, however, prices had fallen sharply, with futures dropping below the $5,000 mark. These rapid swings have drawn notice from financial markets and consumers alike, highlighting how quickly conditions can change. The fluctuations became even more pronounced after reports surfaced that President Donald Trump planned to nominate former Federal Reserve official Kevin Warsh as the next chair of the U.S. Central Bank. Despite the recent pullback, gold prices remain far above where they stood just 1 year ago. At that time, New York spot gold was trading at less than $2,795 per troy ounce. The comparison illustrates the scale of the increase and helps explain why so many consumers are now taking action. Some are selling jewelry they have owned for years, hoping to capitalize on high prices. Others are buying gold for the first time, whether in the form of coins, bars, or financial products linked to the metal's value. Across the United States and in other countries, local merchants are reporting increased activity. Jewelry stores and precious metal dealers say more customers are coming in to either sell existing gold items or make new purchases. In addition to physical gold, some consumers are investing through exchange-traded funds, which allow people to trade on the value of gold in a way similar to stocks. These investment vehicles have become another pathway for individuals seeking exposure to the metal without holding it directly. The renewed interest is closely tied to broader uncertainty in the global environment. Historically, buying gold and other precious metals, such as silver, has often increased when investors feel anxious. Gold prices climbed worldwide during the height of the COVID-19 pandemic, and they also rose amid wars and economic disruptions linked to tariffs imposed by President Trump on foreign goods. The latest surge coincides with escalating geopolitical tensions involving Venezuela and Iran, repeated calls by President Trump for the United States to take over Greenland, and a more confrontational posture toward American allies. This atmosphere of instability has been cited by experts as a key factor behind the rush. Daniel McDowell, a professor of political science at Syracuse University, described the situation as a significant shift in how people perceive the global order. He said that in moments of instability, purchasing gold has historically served as a psychological response for those seeking a place they consider safer for their money. The current rise in gold prices has also occurred alongside a weakening U.S. dollar and growing questions about the future independence of the Federal Reserve. The effects of these trends are visible on the ground. In Paris, activity has surged in the city's historic district, known for dealers of gold, silver, and coins. Traders at Godot and Phil's report a steady stream of customers from opening to closing time, totaling roughly 100 transactions each day. The traffic includes individuals arriving to sell long-held items, as well as buyers entering the market in response to rising prices and economic concerns. Among those sellers is 76-year-old Annick Latulika, who brought in broken jewelry she had kept for years. She said that even holding money in the bank now feels uncertain. At the same time, buyers are also present. After purchasing a gold coin, 53-year-old Christoph Thoris explained that he chose to convert some of his cash into gold in hopes of protecting his savings. Their experiences reflect a broader mix of motivations driving consumer behavior in the current market. The surge in gold prices has not come without challenges. Around the world, consumers are facing sticker shock as the cost of gold climbs. Rapid price swings have also placed pressure on sellers, particularly those dealing in products affected by new tariffs. Larger jewelry retailers have acknowledged these headwinds. Companies such as Pandora and Signet, which owns brands including Zales and Kay Jewelers, have pointed to the combined impact of tariffs and rising costs for gold and silver during their earnings calls in 2025. Higher gold prices tend to have the greatest effect on certain products, including gold chains. In contrast, experts note that diamond prices have been falling. Joshua Barone, a principal wealth manager at Savvy Advisors, has cited the rapid growth of lab-grown diamonds as a factor that has lowered average diamond prices in recent years. As a result, many pieces of jewelry containing those stones have actually become cheaper in stores, even as gold costs have climbed. While gold's appeal has strengthened, its unpredictable nature remains clear. Prices can rise quickly, but they can also fall just as fast, as seen in the sharp declines recorded on Friday. Although values remain significantly higher than they were a year ago, broader corrections are still possible. These conditions have prompted many consumers to act now, either by selling gold they already own or by cautiously entering the market. As the global rush toward gold continues, buyers and sellers alike are weighing opportunity against risk. Experts stress the importance of working with reputable dealers, understanding pricing structures, and recognizing that precious metals are subject to sudden swings. In a world marked by uncertainty, gold is once again being tested as a store of value, offering both reassurance and risk in equal measure. Stay informed as this story continues to unfold, and if you found this report useful, like, comment, and subscribe for more updates on global markets and economic trends.